Have you ever looked at your investment statement during a down market and thought, oh, this is nothing but bad news? What if I told you that sometimes those temporary losses can actually be turned into a tax advantage that saves you real money? Hi, I'm Stephen Crawford with Clarity Wealth for this week's Friday Fireside Chat, and I do want to explain a strategy we use behind the scenes to help many of our clients reduce taxes and improve long-term outcomes. It's called tax loss harvesting. Tax loss harvesting is when we intentionally sell an investment that's below the original purchase price to realize a capital loss so that we can use that loss to lower your taxes. That loss first offsets any realized capital gains for the year, short and then long term, following the IRS ordering rules. And if losses exceed gains, you can generally use up to $3,000 per year against ordinary income when you file as single or married filing jointly, with any extra amount carried forward indefinitely to future years. When we do this, we're not abandoning your investment plan. We reinvest the proceeds into a different security that plays a similar role. That said, we do have to make sure we avoid the IRS wash sale rule, which disallows the loss if the same or substantially identical security is purchased within 30 days before or after the sale. Why does this matter? This strategy helps offset gains in your portfolio and in some cases reduce the taxable income you report. In short, it's a way to make your investments more tax efficient without changing your long-term strategy. So where does it apply? Well, we only do this in non-qualified accounts, which is a fancy way of saying taxable investment accounts like brokerage accounts. It does not apply to retirement accounts like IRAs, Roth IRAs, or 401ks because those accounts already have built-in tax benefits. When do we do this? Well, we look for opportunities throughout the year, especially during periods of market volatility when prices move around quickly. You don't need to monitor this or take action. We handle it as part of managing your portfolio. So is this market timing? Absolutely not. Tax loss harvesting isn't about trying to predict or time the market. It's about making smart, tax-efficient moves while staying invested. So what should you do? Well, if we manage your taxable accounts, we're already doing this for you. If you're not sure whether this applies to you, or if you manage your own investments and are looking for some guidance, we're happy to help. Taxes can quietly erode returns over time. So finding legal ways to minimize those taxes can have a real impact on building long-term wealth. If you have questions about this strategy or want to see how it fits into your plan, please reach out. We're here to help you keep more of what you earn. We look forward to hearing from you, and if you found this video helpful, please be sure to like and subscribe below.